Welcome back. I'm Pratap here. Today is 8th December 2023. So we are going to generate demand and supply zones for the end of the day, 8th December 2023. And today is also the end of the day for the week. We are also going to generate weekly reports in this video. And if you are attending this video first time in our channel, please understand we are providing free training on supply demand zone price action theory. So you can access all the videos from our YouTube channel. You can click on this home page in our NeoStock YouTube channel and then scroll down to the playlist Supply Demand Zone Price Action course. Click on this playlist. And all the training videos related to supply demand zone price action theory are available. Starting from lesson 1.1 until the recent lesson, you can access from this playlist. Even all the upcoming videos also will be placed under this playlist. So please make use of this opportunity. Let's get into our session. So what is the theme of today's session? We mainly focus on how to look for the opportunities when there is a violation in any zone. We have seen sometimes some of the zones will be violated, especially our high liquidity zones. And if you are immediately run away from that particular stock, you might miss good opportunities. So always you have to look for the other available opportunities to get a successful trade. So a couple of stocks we will analyze as per the zones generated in our previous report. Even before that, look into Nifty daily chart. Still Nifty is moving in a specified range. That means it is forming a zone. So far in this zone, 3 base candles are there. So we need to look for a leg out in the coming sessions. Probably is it going to be a rally candle or drop candle? We may not be knowing that until the formation of that particular zone. Now let's look into the stocks related to our theme. So today, couple of zones are failed. Let us look into those stocks. The first one is Pidilite Industries. Our previous report identified a 75-minute supply zone. Let me open the time frame, 75 minutes. This is a 75 minutes high liquidity zone. And today prices are entered into this zone. But see how this entire zone is violated. Okay, if you want to take a trade, how do you look for the trade? Inside the 75 minutes, we have to find a fresh 15-minute zone. So let us get into this zone. Inside the zone at 15 minutes time frame. We have only one 15-minute zone is available in this. That is demand zone. So that means we are fine-tuning 75-minute zone with 70 at 15 minutes level. So here we have, it looks like there is a drop candle and then a base candle. Then again we have a rally candle with gap. So let us mark this zone. So this is a 15 minutes demand zone. Okay, but the risk is very high, right? So what we do? Always we will fine tune the 15-minute zone with the 5-minute zone, because inside this 15 minutes, we will find a 5-minute zone. Probably that will help us to find the entry. But also remember, that is also going to help us in identifying the structure of the zone. Based on that, we will be in a position to identify whether that particular trade is going to be successful or the zone will be violated. We will be in a position to explain. We have learned that concept earlier. So now most of the people who attended that particular video, that is when a zone fails, probably you will be having better understanding about how to identify whether our zone is going to be a successful zone or it is going to be failed in advance. We have built that skill. So let's get into the 5 minutes. So look into the structure. Inside 15 minutes, we have two base candles. This is candle number 1, this is candle number 2, and even one more, candle number 3. Even before that, candle number 4, candle number 5, candle number 6, candle number 7, candle number 8, candle number 9. And probably this could be a leg candle because the body is more than 50%. And the rest of these candles are having either body less than 50% or most of these candles, the size itself is either medium size or a small size. And medium size candles are having a body less than 50%. So when you have these many candles, generally how these candles should move? Within a narrow range. But are they moving in a narrow range? So we have a candle, just we have with a lower low one more candle, with lower low one more candle, with lower low one more candle, with lower low one more candle. And here also we got a lower low, just this low is a little less than the previous candle. When candles are moving with lower lows, can we say they are moving in a narrow range? No. Maybe one candle is having lower low, another candle is having higher high, the next candle. That way they might move in a narrow range. But these candles are not moving in a narrow range. So this is the first sign that indicates this zone is not having a proper structure. There is something wrong. That's why what happened today? Easily the prices violated this zone. Let us assume some of us are not having clarity about the structure and not having knowledge about when a zone is going to fail. Generally what they can do, maybe they can assume this base candle as a leg candle. Sometimes we may get convinced. Is it acceptable? Yes, sometimes we can acceptable. Just ignore all these previous candles. Structure. Just look into this structure, only this structure. Now let us expand that area. Let me zoom in. If you zoom in, still the structure is not having clarity. Now all these candles are looking like base candles only, even after zooming. If I zoom out, maybe some of you might feel, okay, maybe we can consider this as a leg candle, leg in, and next one is a base candle, and next one we have a leg out candle. If anybody wants to consider, still no problem. You can draw a zone. What happened? Easily violated. That means it is stopped out. Yes, sometimes we can accept if the zone is failed stopped out. Even if it is stopped out, the risk is very, very minimal. You know what is the value of that particular zone stopped out value? So for one future lot, the risk is only 487 rupee 50 paisa. Its value is only 487 rupees, 487 rupees 50 paisa. Minor risk. So your order is stopped out. If you consider the previous one is a leg in. But if you ask me, I don't take a trade at all in this zone because the structure of this particular zone itself is not at all convincing. Even if you convince the previous candle to the recent base candle, the previous one is a leg candle, maybe it is a little, the value is, the range is maybe a little higher than the medium sized candles if you feel like that. Why we are saying most of the time this candle we compare with previous candles and all these previous candles are smaller and this particular candle is the length of this candle, that means the range of this candle is a little higher than all these candles, so that I want to consider this as a leg in. If you are convinced like that, still it is acceptable, I am not denying that. because it is the human decision we have to take. At the time, you ignore all these previous candles. Your focus is only on these two candles, whatever currently you are seeing. See, the next one is a with a gap. If you add the hidden body, this is going to be a rally candle. After that, you have a follow through candle also there. That way, you can feel this is a very good zone. And moreover, there is a professional gap is there. Generally, what happens when there is a professional gap, when prices are entering into that zone, mostly we get a good success. Mostly we get. There is no doubt in that. That way also we can feel this is going to give a good trading opportunity. So I'm not denying that. That way you can take a trade in this. That way, yes, it is possible you can take a trade. Because maybe my experience is different. I'm rejecting this trade by seeing this entire structure. I'm not convinced this price structure. When prices are moving in with this structure, I feel, because understanding price structures are very important at the time of zone creation. You will be able to understand once your experience grows. But time being, assume this is a success. This is a valid trade. I'm not denying it is not a valid trade. Please remember. So those who are learning, or those who completed our courses recently for the last 2 years or 3 years and started trading by using demand and supply zones for the last 3 years or even 4 years, last 4 years, mostly will get convinced this is a valid zone due to professional gap. That way you can consider without by ignoring how the structure of the previous candles. But what happened? Is our trade successful? No. So next candle itself it is violated. That way we got a loss. We have to accept. But the loss is very minimal. There is nothing wrong in accepting this risk because the risk is only 0.4%. It is only 0.4% risk. Mostly we accept risk up to 2% as per our risk management. Comparing with our total capital we are investing. So here, when I am considering from one futures lot, the cost of one futures lot, the risk in this particular zone is only 0.4%, which is 487 rupees 50 paisa. Very minimal risk. So that way you can accept. There is nothing wrong in accepting this trade. And moreover, it is inside the high liquidity zone. And this 5 minutes high liquidity zone is again inside the 15 minute zone. But our trade is failed. When you fail, you have to accept. But what happens most of the times when our trade fails, what we do? Even for small risk itself, we will be disappointed. We change our mood. We disturb ourselves. We not even bother about what opportunities this stock is going to provide immediately after our zone is failed. That means our trade is stopped out. After stopped out, you may get one more opportunity in the same stock. Our mind doesn't allow us to look for the next opportunity. All these kind of things might happen in the initial stage of our trading. Maybe 4 years, 5 years or 6 years of our trading, our mindset will be like that most of the times. But those who are trying to change that mindset and those who are going to work hard to change that mindset, always you will be a successful trader. Whatever the loss, maybe hardly it is less than 500 rupees. Whatever the loss you got in the trade, probably immediately you may recover from that loss in the next trade itself. For that, you have to observe the chart properly. Most of the times we have seen some traps below the zones. Previously also we discussed, I think, in a couple of stocks. We have identified bull traps, bear traps just above the zone or below the zone. And if you look into this chart, below this stock, At 5 minutes level, there is a high liquidity, 5 minutes high liquidity zone. Actually, it is a 15 minutes high liquidity zone. Further, you can fine tune to 5 minutes level. That is possible. So let me change the time frame to 15 minutes. There is a 15 minutes high liquidity zone just below this. Just below this zone. And risk is also very small risk. And already we fine tuned to type 2 proximal entry in this drop base rally. Previously it has given first entry and second entry. And even this is the third entry. Looks like it didn't enter into the zone. Actually it is entered. If I draw proximal type 1, that is zone high to zone low. So this value also entered into the zone 3 times. And after that, this is the 4th time actually entered into the zone and gave the entry, and see, it reached up to this 15 minute supply zone. Rally base drop, the 15 minute supply zone. Because most of our high liquidity zones are having, even if it is 5 minutes zone, even it is a 5 minutes high liquidity zone, the power of the zone, what is the power? The pending orders inside the zone. Most of the times high liquidity zones are having many pending orders. Institutions keep on adding new orders into that zone. That's why it works for multiple times. You may ask a question, how you know this is a high liquidity zone? Because we already learned high liquidity zones are having the ability to provide multiple tests. That is one clue. Because already several tests happened earlier. That way you can identify. And confirmation also I have taken with the help of our software. Look into our software. So in our software there is one concept called top-down analysis reports. So there is a supply demand zone chain is there. So here, let me copy the stock code, Pidilite Industries, and the entry time frame is 15 minutes. And let me generate HDZ chain for 15 minutes time frame. So when is the leg-in here? Leg-in is on 1st December, 10:45. We have one base candle, one leg-out candle. The 1st December, 10:45 minutes. Look here, 1st December here. See here, 1st December, 10:45. See here, we have the serial number 13. This is a high liquidity zone. S underscore DZ is a high liquidity demand zone. It is already tested 4 times. And it has given 7 rejections from this zone so far. And the 1st December at 10:45, it is having one base candle and it is having one leg out candle. So the same thing we have drawn here. 1st December, 10:45 base candle. Today, this zone is broken. This high liquidity, 75 minutes zone is broken. But even then, the price reached up to this 5-minute zone where we have the actual real pending orders. Why this zone is failed? Because we know well in advance we identified mostly this zone is going to be failed by seeing the structure on the 5 minutes candle. By seeing this price structure in the price minute candle, I can easily tell this is going to fail. Suppose you are not having a very good experience to understand the structure of the prices. Still you may accept this trade. I am not denying on that. So your trade is stopped out, no problem. You got a very minimal loss. Only 0.4% of your capital you lost. That's it. Then wait for the next opportunity. Below that you have a 5 minutes high liquidity zone and which is working several times for a long time. And recently, the first clue, whether recently is this going to work or not, you might be having some doubts in our mind. Still you can build confidence even if it doesn't work. Even this risk is also very small risk. Even this risk is also very small. Because this risk is again a minimal risk, this is also going to be the risk of this particular zone is also less than the previous zone, what it is stopped out. The risk of this zone is either almost similar or even a small, a little less than. Probably you may lose another 450 Indian rupees or maximum 500 Indian rupees, not more than that. That way you can accept the trade. There is nothing wrong in taking another choice. And the second reason why we have confidence is previously see the rejection. These rejections are confirming probably institutions might have added new orders into this zone. That's why rejections has come from this zone. Just before entering into this zone, that is type 2 entry, before entering, we are seeing these rejections. That means below this rejection, definitely there will be a heavy order flow. So today we took, that's why price action clues are very, very important, especially rejections are a very important concept that always helps some of our human decision making. It is a strong tool, the rejections from the zones. That is one of the reasons why I have added rejections into our reports. See this heading. Even the other regular demand and supply zone reports also, we have this column rejections. Rejections are always, rejections is a very important price action clue. Most of the times, more than 90%, you get success if you are able to trace these rejections in a proper way. So today again another successful trade. Even though the main 75 minutes high liquidity zone is failed, still the 15 minutes high liquidity zone provided another trading opportunity, and finally it reached the target. You know how much profit it has given? It has given 5,000 rupees profit on one futures lot, which is 4.38% ROI, return on the investment, on one futures lot. How much, probably if you would have taken a trade in this earlier trade, how much loss you would have got? You would have got 487.50 paisa loss. If you deduct that money from your 5,000, still you would have got 4,125 rupees profit you would have got. Sorry, 4,600, not 100, 4,600 15 rupees or 12, 600, say we can say 4,600 rupees profit you would have got. Instead of 487.50, let us assume the previous zone loss is 500 rupees. Let me round it for our easy calculations. So you would have got 4,500 rupees profit. When you will be able to get such kind of opportunity? When if you are able to control your mind properly, even though your trade is stopped out, and if you are in a position to accept next trade within the same stock, that is the most important thing. If a zone is failed out, still your mind is in a position to accept the next trade in the same stock. Most of the time what we do, we just close that stock, or we move away from our trading day on that particular day. That should not be done. Okay, still in our Excel sheet, I will add this stock as a failed stock, even though my experience says this is going to be violated. There is nothing wrong, because some people definitely might have accepted a trade on this zone. So for that point of view, in our Excel sheet, we will add one more trade where it is stopped out. At the same time, we are also going to add one more trade, that is 5 minutes high liquidity demand zone. This is a 5 minutes high liquidity demand zone. Even our software also confirmed the same. Entry number 13. The one I highlighted with this blue color. That's why I'm saying always you should change your mindset. just for the small losses when our trades are stopped out. We should not get disturbed. In the same stock, most of the time, we get the opportunity. Let us look into one more stock that is also violated, but actually it is not stopped out. There are other reasons we already learned. But still, let me show you the stock. Tata Steel. Tata Steel is having a high liquidity demand zone. This zone is not stopped out, but the one we have drawn, the 75-minute zone inside that is stopped out. But I am showing you this daily time frame because we have a leg-in candle. You might be having a doubt how it is a leg-in because already from there is a gap. We have added some hidden body in this. So at the time, this candle is accepted as a leg candle by our software. Now you get clarity by comparing with the previous candles. The length is a medium size, and because there is a gap from the previous close, if you add the hidden body, definitely this is looking like a medium size leg candle. That way software considered this as a leg candle, and then we have a base candle, and then again adding the hidden body, this will become a leg out candle. Okay, what is our strategy as per high liquidity zones? From daily, because this is daily, we go one time frame lower, that is 75 minutes. In the 75 minutes, we have a rally candle, and then this is the one, this is the rally candle, the big candle. This is a failed ERC candle. This is a failed ERC. Failed ERC we can use as a leg-in directly. And then we have two base candles, and then we have a leg out candle. That way we have drawn this zone. So what we do, we go again one more time frame below, we will fine tune. Up to mostly we go up to 5 minutes time frames. Sometimes we may stop at 15 minutes. If the 15 minutes time frame, the risk is very minimal. But otherwise, most of the times we get into 5 minutes level. There the 5 minutes we will take the entry. That way risk will be minimized and also we get best reward. So for that, what we have to do, we have to get into five minutes. 15 minutes. First let me look into 15. After that we will get into 5 minutes. So where we have to draw inside the 75 minutes. So inside the 75 minutes, do we have a 15-minute zone? Yes, we have a leg-in candle. We have two base candles, short candles, and then we have a rally candle. That way we can draw a zone like this. We can also draw one more zone also inside, something like this. LOTL concept in 15 minutes time frame. That means this entire thing can be considered as a 15-minute zone by combining both these zones. Okay, but whatever it is, we have a 15-minute zone inside 75. But what we have to do for fine tune, we will go to 5 minutes because 5 minutes always brings better clarity to understand the structure. Always remember, structures are very important. Understanding the structure of the zones. Look into this, the first 15-minute zone. We have a rally candle, and then we have base candles, and then we have a rally candle. Is it an excellent structure? If you apply fundamentals, you say no, it is not excellent structure. Why? Because we have see how many base candles 1, 2, 3, 4, 5, 6, 7, 8. When you have these many base candles, what will happen? Next time when prices enters into this zone, mostly the zone will be failed very easily. See here, this is the time prices came and easily it is broken. Look into the zone below this, at least it has moved some price. Maybe it is not a considerable move compared to the our target point of view, but at least few pending orders are there, but the first zone is easily failed because the structure is a weak structure. The first 15 minutes, so I am deleting. Now can we draw any 15-minute zone inside this? Yes, we can draw. Something like this. We have a rally candle, that is a leg in. Let me expand to bring clarity. So this is the leg in, and we have a base candle, and we have a leg in. This zone. Is this zone going to work? Will it work? Sorry, this is the first one we have already drawn. So we have to delete this. Because we have so many base candles, this is failed. This 5-minute zone. Then do we have any other 5-minute zone below this? Yes, we have one more 5-minute zone. We have a drop candle and we have a base candle 1, base candle 2, base candle 3, and then we have a rally candle, but this rally candle, the structure is not great. That way we may consider this zone is a doubtful whether to accept or not. Still, some people will accept. So we cannot say it is wrong. Okay, let us assume, let us draw this zone. So how this zone looks like? A zone without a great leg out. When a zone is not having a great leg out, at least the next candle should be a follow-through candle. Is the next candle is a follow-through candle? No. Because the next candle is not a follow-through candle, this is not a valid zone. Still you consider a valid zone. See what happened today? Once prices entered into this market area, okay, some level it moved and then it came down and broken easily. Maybe it is not a great zone, maybe very few pending orders are there. They didn't push the price up. Okay, fine. Next, third scenario in the same zone. We have one more zone here, 5-minute zone. You can consider, because this is not a great leg candle, not a valid leg out candle, even it is not valid, we drawn a zone thinking the next candle could be a follow-through candle, but next candle is not a follow-through candle, next candle is a base candle. Now what we can do, you can draw one more zone here, 5-minute zone. This is a valid zone. We have a leg in, we have a base candle, and leg out is great. But see what kind of stock it is, the leg out it is. It is a sluggish. A leg out with sluggish cannot be accepted for the trade. What sluggish? The prices will be mostly moving within that zone area only. Maybe going up and down or maybe moving few days within that zone. That is point number 1. Point number 2, this zone is already tested here. See, prices from here it went and then again it's moved up. That means this zone is tested. Maybe somewhere here there is a good order flow here, from here. Even if you minimize, this is a type 2 level. Generally what we do, we take, suppose if the zone is tested, sometimes you might be having some reasons in our mind thinking that at least one more test this zone will give. When one more test, if you go for a deep entry is mostly type 2 entry. So when you go to this type 2 entry, that is deep entry, still even deep entry also it is tested. Once a zone is tested, is it acceptable? That way also it is not acceptable. See next time what happened when prices entered into this zone? See easily it is broken. All these are all different reasons. By considering all these points, we say this zone is going to fail. Because all these points, what we discussed in this discussion, they are all already we discussed in a video when a zone will be failed. Maybe a few weeks back, I explained. All these points we discussed. A tested zone is there. Mostly it will fail if it is not fresh. If the zone should not be high liquidity zone. If it is a high liquidity zone, it always supports multiple tests. Maybe second test, third test, fourth test, or even fifth or sixth also they may support. There are other reasons to confirm whether it will support or not. But high liquidity zones always work for multiple times. But if it is not a high liquidity zone, once it is tested, we cannot accept that zone. See here, it is already tested once. Price moved up. Next time, it is easily broken. So this is the way. And the earlier zone is having multiple base candles. More than 6 base candles, the zone will fail. Based on that reason, we rejected this zone. Because this zone is tested, we rejected this zone. And the third zone, it is not having a great leg out, and the next candle is not a follow through candle, we rejected the zone. By rejecting all these zones, finally what we concluded, this zone will be failed easily. There is no factor that is supporting to confirm this zone is going to work. That way we haven't find any reason to accept this trade. At least the previous one in Pidilite, at least we have at least one reason to confirm, except looking into the structure of that particular zone. We have a reason. At least we consider one candle that is looking like a base candle, but we considered that is a leg candle based on the range, because the range is a little higher than a medium size. It is almost medium size, only a little. That way you have given some favor. And a second reason for giving some kind of favor to that particular zone is it is having a gap. The leg out is with gap. That way we considered. But here no reasons are available, or no reasons are favoring to accept none of these zones. That's why we are confirming this zone will definitely 100% it is going to fail. That is what happened. Okay, fine. Zone is failed. But are we getting another opportunity here? Yes. We have an opportunity. What is the opportunity? We have a leg candle and then 2 base candles, and then we have a leg out with gap. But it is looking like a drop candle, right? But the moment you had a hidden body, this entire thing, the green color body will be added here. And this entire red color body we can accept like a wick. That is a big ERC candle, large candle. So this is looking like a hidden zone. The hidden zones, mostly it will work most of the times. But previous example, it is failed. Okay, once in a while they fail. But once in a while it failed because I know the reason why it will fail, because of the previous structure is not convincing at all. Okay, now here there is a with a gap. Based on that, we can accept this trade. Now let us look into this trade. See, prices just entered into this zone. And after that, the return it has given, it moved up to its 15 minutes target. What is the 15 minutes target? We have a drop, we have a base, and again we have a drop candle. So it has reached. You know how much profit it has given? 5,500 rupees profit. Tata Steel from this 5 minute zone. And do you know what is the return it has given? ROI? The ROI is 4.19%. From here to here, the ROI, return on the investment for one futures lot, is 4.19%. So it looks like a successful trade, right? Even though the zone is failed earlier, even though we did not take an entry here, the reason why we didn't take entry here is because all these zones are either they are tested, or the structure is base candles are more than 6, or we have another zone, 5 minute zone, not having proper structure in the leg out candle. That means the leg out candle is not great, and after that we didn't find any follow through candle. We are again found only base candle. Follow through candle means the next candle also should be a leg candle to confirm the previous leg candle, which is not great, to be considered as a leg out. The follow through candle will help. These points I explained in our yesterday's session, if I am not wrong, I think. See, by considering all these things, we have drawn a zone and accepted. But the problem here with this zone is, okay, according to us, according to our analysis, it worked. But we don't accept this trade. Why we don't accept? There are multiple reasons. One reason, there is no 75-minute zone. If not 75 minutes, can we take 15 minutes? Yes, we can take 15 minutes. But there is a 15-minute zone is there. See, this is the 15-minute zone. Inside 15 minutes, we have 5-minute zone where we have drawn this zone. So this is what the 5-minute zone. This is 5-minute zone. That means 15-minute zone and 5-minute zone are almost the same. The height of this zone. The height means the depth of this zone. The depth of this zone mostly determines our risk. Look into the risk. Risk is higher than the acceptable. That is point number one. Point number two, the reward is also not good. The reward is even less than, a little less than 1:2. Maybe around 1:1.5 or 1.6, like that. We are going to get this reward. So we don't accept such kind of trades. At least a minimum 1:3. Okay, worst case, at least 1:2.5 is acceptable. 1:2.5. Some people take 1:2 also, but I give least preference to that. Least preference, at least 1:2 point is better. 1:3 is good. But if for beginners, 1:3 is also not good. Maybe 1:5 could be a good trades for beginners, because beginners make more mistakes. So that's why if 1:5 trades are there, at least that will protect the other trades even though you get losses. That's why generally people suggest 1:5 for beginners, 1:3 for people having some good knowledge. For experienced people, 1:2.5. Some even experienced people, they take 1:2, but fine. That is up to them. So that way we are not accepting. So trade is not acceptable. But if the risk would have been within the acceptable limit, it would have been a successful trade. Okay, what is the technique we use if the risk is very high? What generally you do? You go for type 2 entry. Type 2 proximal entry or type 3 proximal entry. You can take a trade like this. Still you feel the risk is very high, you can further reduce our risk like this. Or you can manually adjust this particular accepted up to 2%, because you are accepting 2% level risk. What you can do, you can also adjust assume up to this point a 2% risk is there. That way you can take a trade, only one prices are entering into this. These are all the different ways. There is no strict rule that you have to limit yourself to type 1, type 2 or type 3 entries. Manually also, without any type 1, type 2 entry, whatever the maximum value, it supports your risk, you can adjust this value up to that. You can keep like this, you can keep like this, you can keep like this, or even you can keep like this. You have the choice. There is no rules. But type 1, type 2, type 3 proximals are at the initial level. Because initial level you are not having good knowledge on the subject. At least we are defining some easy methodologies to make you understand the trades. Once you get experience, trade is there in your hand. It is all depending on how much risk you can accept. Based on that, you can simply adjust the value. Previously also we have seen one or two trades like this by adjusting. So that way it is not a new concept for you. As if you are looking, if you would have listened my earlier videos. Okay, let us assume, let me limit to type 2 entry. Assume this is acceptable risk. Instead of higher wick to lower wick, I am taking lower wick to higher body. Now look into the trade. See, is prices entered into this zone? No, that means you didn't get the trade today. You missed the trade. So either way, even if you are adjusted to type 1 entry, that is wick to wick entry, prices entered into the zone, still you don't take the trade because the risk is not within your limit. It is not having good RR. Risk reward is not there. Acceptable risk reward is not there. And the second reason is, if you adjusted to type 2 entry, your trade might not have been entered into this zone. That way you missed the trade. Anyway, either way. But why we are discussing about this? Just to tell you, when something is violated, a zone is violated, or your trade is stop loss, still we need not worry. We have to make your mindset in a strong way. You should always be having a strong mindset. The small stop losses or stopped out orders should not disturb your mind. Always you will find another opportunity, mostly in the same stock itself. If your mind is disturbed, what you do? You stop thinking. If you are stop thinking, the next opportunity that you are going to get in the same stock, you will miss that. Instead of making yourself into a profitable day, you will make yourself to a loss day. Pidilite Industries, those who have taken a trade but that is stopped out, still you would have got a profit of 4,000 rupees 500. Instead of 5,000 rupees, you got 4,500 rupees. The remaining 5,000 rupees is what you got stopped out in the previous trade. I think this is my second lesson or third lesson I am explaining on this particular topic. Previously also we have seen such kind of trades, maybe either once or twice. There we discussed about the bull traps at the time, bull traps and bear traps. And today in Pidilite Industries, we have seen, instead of bull and bear traps, we have seen below the zone, we have identified a 15 minutes high liquidity zone. This 15 minutes high liquidity zone finally made our day as a profitable trade, profitable day. Instead of getting a loss, a stopped out order at this particular zone. So this is the main theme of this particular session. There is one more theme is also there in this lesson. Let us look into the stock of Wipro and I will explain. So Wipro is on daily time frame, if I am not wrong. Yes, we have a daily supply zone. Already once prices entered into this zone and today it is entered into the zone. So as per our rule, what we do, we go to 75 minutes time frame. Inside this daily, we will identify a 75-minute zone. Is there any 75-minute zone? Yes. We have a leg-in candle, we have 3 base candles, and then we have a drop candle with a gap. So inside this 75 minutes, I have fine-tuned to 15 minutes and 5 minutes level. Let me show you that. Something wrong. Okay. Now look into this inside the 75 minutes. So here we have like one ERC candle. We have 1, 2, 3, 4, 5 base candles. We have a zone here, 15-minute zone. So inside this 15 minutes, again what I did, I went to the 5 minutes and identified a 5-minute zone and further fine-tuned the risk. So here we have a drop candle and we have one base candle and then again we have a drop candle, leg out. So this is the, we are waiting for an entry in this zone. We prepared and we were waiting for. But is prices entered into this area today? No. Prices did not enter into this area. Then what is that zone we have drawn here? You might get a question. Okay, this is a different trade, not based on our high liquidity zones. Just I want to show you, and this topic we already discussed on Wednesday. On 6th December video, we have discussed about this topic. What is the topic? We have another supply demand zone price action theory. Currently, what is the supply demand zone price action theory we are using? Based on institutional imbalances. If you look into our training lesson 2, I clearly explained what are institutional imbalances. I have explained the difference between imbalance versus imbalance in our second video. In case if you did not listen that video, please go through that video. That is a very, very important video. That is the basis for this entire demand and supply zone price action theory. So we are identifying all these zones, all these demand and supply zones based on institutional imbalances. Then what is this new theory other than institutional imbalances? This overview I have given. On Wednesday, that is 6th December video, I have explained what is that. If we have two leg candles, we have a leg candle, another follow through candle. What kind of leg? Either rally candles or drop candles. See, this is a drop candle. The next one is a drop candle. First, let me delete this. What you can do from this wick of this candle and the wick of the next candle. Here, lower wick of the first candle, because these are all the drop candles. Because these are the drop candles, the lower wick of the first candle and higher wick of the second candle. Here in this candle, higher wick and the day high both are same. So till that place you draw a zone. This is the way you have to draw the zone. But what kind of zone? Prices are going down, it is a supply zone. Let me change the color to supply zone. See, from this wick of this candle and the high of this candle, we have drawn a zone. Is this zone going to work? Yes, the theory is telling this will work. This is the way to draw the zones, and these zones will work. And why the theory is saying? Because here the actual order flow will be there. Is it going to work for every zone? No, is every demand and supply zone we land the concepts. Is it working for every zone? No, they are not working. The other factors like high on the curve or low on the curve or equilibrium, or trends like uptrend, downtrend, all these factors are influencing, right? Exactly the same way in this supply demand zone theory also, all the factors will be applying as it is. The only difference is you will be drawing the way how you are drawing the zones. Here no dependency on number of base candles are there in this zone. No such kind of dependency here. Their goal is there is an order flow. If you draw a zone, there is an order flow. After that, you can apply the concepts like zone achievement, and then you can apply the concepts like trend, you can concepts like curve, that is location. All these things you can apply as it is. But the way how you are drawing the zones, some difference is there. Okay, is this zone going to work? I have a belief that it is going to work. The reason is based on the price action clues. Previously we discussed price action clues. See, near to the zone, price went and then push it down. You may say this zone is very narrow, very, very narrow. Very thin zone, this one. It is not thick zone, very small, narrow zone, very thin. Is it going to hold the prices? Definitely it is going to hold if the entire order flow is there inside this area, in this small area. If there are more number of orders, obviously it will push the price down. So what happened today? Today, price entered into this small area, from there it came down. Is it working or not? It is working. But is this the way we trade? No, we don't trade in this way. We trade as per our normal demand and supply zone theory. Then how we identify our zone? Moreover, this is a 5-minute zone. Is there any 5-minute zone in this area? No, we haven't seen 5 minutes leg candle, and another leg candle. We have seen 3 leg candles here. I mean drop candles. Then where is the zone? And on Wednesday's video, when I explained, I told you one important point. This another supply demand zone theory, whatever it is saying, we can draw a zone like this. When you have such kind of zones, mostly in lower time frame, that is 1 time frame below or 2 time frames below, you will find a zone as per our supply demand zone theory. What is our supply demand zone theory? As per institutional imbalances. Definitely you will find, on 90% scenarios, you will find a zone at lower time frame. Already we are at 5 minutes time frame. So go to 1 minute time frame. The lower time frame below 5 minutes is 1 minute time frame. So go to 1 minute's time frame. Now let us look into that zone in 1 minute. Now let us zoom the. Did you find a 1 minute zone here? Yes. How do we draw our 1 minute? From higher wick of this zone and lower wick of these zones. And even higher wick of this leg out candle, because this is a drop, base, drop. We have a drop candle, we have 2 base candles, and again we have a drop candle as a leg out. So which kind of base candles only having higher wick? So now I am changing the zone as per our demand and supply zone theory. What is the low? 424.50. This candle low 424.50. Okay, both these candles low are same. This is the way we have drawn the zone. And based on this, what is the stop loss, what is the entry, and how much risk we can take, everything we will decide as per our rules. So we are not taking the trade as per the new supply demand zone price action theory. We are following our original supply demand zone price action theory, but whatever the new theory concepts I have given you an overview, that only we are taking as a reference. That is only a clue for us. Okay, is this zone is going to work for us? I am saying mostly it will work. The reason is, now I am changing to 15 minutes. The reason is, previously we got a price action clue. What is the price action clue? The prices entered near to this zone, from their rejections are coming. And which is an indication that this zone is having a harder flow. we can take a trade, such kind of trades, I have given a name, aggressive trade. Previously, I explained this concept, aggressive trade, probably some 3 weeks back, one of the videos, I think twice in 2 sessions, I have given explanation about aggressive trades. Aggressive trades, different ways you can identify. One of the ways to identify the aggressive trade is based on the price action close. But remember, all these zones should be inside our high liquidity zone. Whichever the high liquidity zone is there, the main high liquidity. What is the main high liquidity? For Wipro, it is a daily high liquidity zone. Actually, how we take the trade? Inside daily, we have 75. Inside 75, we have 15 minutes. Inside 15 minutes, we have 5 minutes. That way, we will fine tune. And finally, we take our trade at the 5 minutes level when prices enter into that 5 minutes. And we are confirming that 5 minutes is having a lot of liquidity. That is what high liquidity means. And inside this daily high liquidity zone, because it is a high liquidity zone, it is having the capacity of creating fresh 75-minute zones again and again and again and again inside that zone. It is also possible that 15 minutes, 5 minutes also will be created, a new 15 minutes and new 5 minutes. But they may not be inside the 75 minutes zones. They might be below the 75 minute zones. Those trades we don't accept. The reason is most of the times those zones will be broken easily. The zone which is there inside the 75 minutes, that is 15 minutes. Again the zone which is there inside the 15 minutes, that is 5 minutes. That will work. For the last 2 months we have been seeing all our trades, the system is like that only. But a few trades we have taken deviations from this approach. That is what we discussed. Inside the high liquidity zone, that is inside the daily, there is no 75 minutes. Before the 75 minutes, there is a 15-minute zone or 5-minute zone, or today's example, it is a 1-minute zone. Still we will accept the trade. Why we will accept? Because this is inside the high liquidity zone. But what is the guarantee that this zone will be broken easily? Because of the price action clue. What is the price action clue here? The rejections just before entering into this. Previously I told you a concept called entry buffers, right? It is exactly a similar concept. Because order flow is starting before the zone itself. What we want here, actually where the order flow is there, such kind of places we want. We doesn't care whether it is inside 75 minutes or inside 15 minutes or inside 50 minutes. If you are able to identify where the order flow is there, whether it is inside or outside, we don't want to miss the trade. For that we've been using different techniques. One technique is price action clues, that is rejections just before the zone. But remember, this zone should be inside the daily high liquidity zone. Suppose if this zone is there somewhere in the down, we don't take, because we will always trade inside the high liquidity zone, or just before the high liquidity zones if there are any entry buffer concepts, entry buffer zones. Okay, now this 1-minute zone is there purely inside, and there is a price action clue. Just before entering into the zone, there is a rejection. That because of that rejection, thereafter price moved completely down. Just 1 or 2 candles if it went down, and again if they came up, we don't consider. This zone is a valid zone. After the rejections, prices should not again climb up. The prices should go down. Immediately or slowly it is moving, it is irrelevant. But finally from here, there is a great move towards the down. It is a significant move. Because of this significant move, we are confirming something is there, some order flow is there in this area. How you identify where the order flow is there? We follow as per our supply demand zone price action theory. We go there, just above that, we will identify a zone. So today we are able to identify this 1-minute zone in 2 ways. One is based on the rejection. Second one, within the 5 minutes, we didn't find a zone, but as per the Another supply demand zone price action theory, we were able to locate a zone and to confirm, as per our price action, there is a zone to confirm. We went one more time frame below, that is 1 minute's time frame from 5 minutes. 1 minute we went. There we have identified a 1 minute zone. And today prices entered into that 1 minute zone. But we named this trade as a aggressive trade. We have identified this trade as a aggressive. See, today just entered into the 1 minute, immediately it pushed the down. Because the order flow is very strong here. Maybe next time again prices enter into this. Can we accept another one more trade? That is up to you. Because generally what we do, if it is this is a high liquidity zone, we will accept. If it is not a high liquidity zone, we don't take risk. Because this 1 minute risk is very, very minimal, just before entering into this 1 minute, just at the edge of the 1 minute, prices went down. Maybe we may get convinced that definitely there will be strong order flow. Maybe once again if prices enter, again it will push down if you feel. And if because this 1 minute zone, the risk is almost negligible risk, very minimal. If at all, if you lose your money, definitely it is less than maybe 2% or 3% of your total capital. I mean, not 2%, 0.2%. 0.2% means maybe it could be around maybe 300 rupees or 400 rupees. And that is a very, very small money. Even if you lose, you don't feel any bad about that. Then you can then you can accept that risk and you can take a trade. There is nothing wrong. How we are taking? By seeing this rejection from here. Just enter into the zone at the proximal line of this zone. Which proximal line? Type 1 proximal line. Immediately we got. So next time what you can do? You can take an entry at type 2 proximal line. If you feel the order flow is very strong, some more risk will be reduced, maybe somewhere here. I'm just blindly I'm drawing. Let us assume your type 2 proximal is here. Next time when price is entered, you can take an entry. That way you can plan your trade. If you want to accept this risk, and if you are strongly believing, this is going to work. What is the reason for strongly we are believing? By seeing this rejection from this candle. Rejection and next candle. See how it went down. But again prices are going up. Why prices are going? Because this 15 minutes demand zone is very strong. When 15 minutes demand zones are such a strong, there is a possibility that this high liquidity zone also will be broken. Who knows? This entire high liquidity zone might break sometimes. Not always I am saying, but sometimes that possibility is also there. Another possibility, again this order flow could be much stronger than this demand. Again it will push down and one more opportunity it may give. That is also possible. See, everything is a risk management game, please remember. Risk management versus the location where we are going to take the trade. We are exactly playing on these two factors for the last 2 months. If you keenly observe, we are mainly focusing on these two factors. The location. Location is based on high liquidity. And the second one, the risk management we are using in a proper way. Because of proper risk management, we are getting a lot of profits for majority of the stocks. So it is an excellent, aggressive, successful trade today. It is an aggressive trade. We named it as an aggressive trade because this trade is not inside the fine-tuned high liquidity area. What is fine-tuned high liquidity area? Inside daily 75 minutes, inside 75 minutes 15 minutes, inside 15 minutes 5 minutes. That is the fine-tuned area. This zone is not in that fine-tuned area. That's why such kind of trades we are calling aggressive trade. But when it is not inside, why we are selecting this trade? Based on the price action clue. Previously, the price action confirmed that there is something interesting is there in this area. What is interesting? Something interesting. Always order flow is only our interesting. If order flow is there, we want to respect that area. So this price action confirmed there is something interesting. That is, some order flow is there in this area. To confirm that, we have seen in the time frame, lower time frames. So 1 minute time frame is confirmed this zone, and today it has given an excellent opportunity. Do you know how much profit it has given till this type 1 proximal line of this demand zone? Because the reason why I have selected type 1 for the target is, see the rejections earlier from this area only. Maybe today it went a deep inside. That is a different story, but we never know. Before the prices are reaching, we never know the future, right? So that's why we have to exit at this high of this zone. And from this 1 minute supply zone till this 15 minutes zone high, the total profit is 11,250 rupees, which is 9.96% return on the investment. When we got this trade at 11:30 today, and when it reached the target at 13:30 candle, just 1 hour or less than 1 hour, this trade is completed. So Wipro trade is an excellent trade from our yesterday's list. And the remaining trades are not executed. What are the remaining trades? Dalmia Bharat is one. So let me go to the daily time frame. Dalmia Bharat, we've been waiting because a lot of rejections are coming from here. Definitely there could be some entry buffers here. Remember the entry buffer concept. When entry buffers are there, slowly prices will move. Maybe next time, maybe it may reach the zone, maybe before the zone again it may go down. At least if next time prices reach close to this zone, and if a risk is very minimal, before entering into this zone itself you can take a trade. There is nothing wrong. That way you can plan your trade. And the other one is burger paints. This is also did not enter. This is the supply zone, near supply zone. So did not enter. But we have again high liquidity demand zone here. We have two high liquidity demand zones. Oh, sorry, the below is not a high liquidity demand zone. It is inside the weekly zone, we have a daily zone. But this is a daily high liquidity demand zone. We have a daily high liquidity supply zone. See, between these zones, the price is moving up and down for the last few weeks. Probably for the last 2 weeks or 3 weeks, prices are moving. That is when from 8th November onwards, almost for the last 1 month, prices are moving within this area. And maybe burger paint also you can keep in your watch list, because we have both high liquidity demand zone and supply zone. Until one of these zones fail, we can keep this stock also in our watch list and look for some opportunities, like what we are doing for Jindal Steel. Jindal Steel, we didn't narrowly missed our entry today. This is 697.55 paisa something, and this is 699. Around 1.5 rupee before missed the trade. But see, if the 1.5 rupee it went up, probably we would have got a trade. If anybody would have taken a trade, I don't think, maybe you might give at least some 50 paisa, 40 paisa before you would have taken this trade. I don't think 1.5, I'm sorry, not 1.5 minutes, sorry for my mistake. It's 1 rupee 50 paisa. Just before 1 rupee 50 paisa. I don't think anybody gives that much buffer before your entry time frame. But anyway, just before it, there is a huge rejection. It has given a good, that means the supply is very strong here in this area. But we didn't get an entry in Jindal Steel. We have to wait again. So these are the trades from our Thursday's report, high liquidity zones. According to me, there are no stopped outs from Friday's list, but according to you, or even I will also convince to some extent, There is one stopped out order in Pidilite. You can consider this small area, this 15, the 5-minute zone. Purely from my point of view, this is not acceptable, but still we will accept by considering other people's knowledge levels and their experiences. So in our Excel sheet, I will add this as a failed, stopped out zone from our list. But we have other successful from 5-minute zone here. We should not forget that point. And the excellent one we have got is from Wipro, but that is purely based on aggressive trade approach. I don't know how many of you really looked into 1 minute, because most of us will stop out at 5-minute zones. Even I will also stop out most of the times in 5 minutes. Sometimes when I have some price action clues and some doubts are there in my mind, mostly those times I will look into 1 minute. That's why for the last few days, I'm also talking about 1 minute. Why I don't want to get more into 1 minute is most of the people learn the concepts in a wrong way. Always we fix in our mind. 1 minute is a perfect zone, or 3 minutes is a perfect, or 5 minutes is a perfect. That is not the case. It is not about the which time frame is perfect. It is about the location of the zone. Based on the location, which time frame is applicable to that zone. That changes. Why a fixed time frame? We should not use a fixed time frame for any stock. Remember, for any stock, you should not use a fixed time frame. That kind of concept is not a valid concept. Which time frame currently at that particular point is suitable to that particular stock? That understanding is important. Sometimes a stock might be working very well in a daily time frame. Sometimes a stock might be working very well in monthly time frame. Exactly at that monthly time frame, prices entered. At the time, you have to take your trades accordingly. You get a long-term opportunities. Within next 6 months, your price will be doubled, or at least 50% return you will get in next 6 months. I will show you hundreds of such kind of examples. And if you stick to only 1 minute, 2 minutes, and if you say, you will miss such kind of great opportunities. First, always we have to understand. See, never fix a time frame in your mind. If you want to become a good trader, always think currently which time frame is best applicable for that particular stock. That way you have to think. It could be a stock or it could be an index, anything. Then you have to explore opportunities accordingly. That way you have to change your plan. Whether I should be a short-term trading opportunities, or it should be a medium-term trading opportunity, or it should be a long-term trading opportunity, or it could be a day trading opportunity. Based on that, you have to take a decision. Sometimes you might be seeing, maybe day traders might be knowing, sometimes when you are doing day trading, you won't get opportunities at all. Continuously for few days or maybe for few weeks, you won't get opportunities. Or even if you are forced to look for some opportunities. Forced means you are convincing yourself because you want to take a trade. But you are convincing in a wrong manner. And in those times, your trades will fail. Most of the times they go against you. You buy, but it will go down. Or you will short, it will go up. Such kind of things will happen. Why it is happening such kind of things? Because we are not analyzing the chart properly. That's why trends plays the major role. Especially in lesson number 11 and lesson number 12. That is what I explained. Now, currently we are focusing on the time frames. Why we are focusing on the time frames? They only confirm in what kind of trade currently it is supporting. Sometimes prices will be flying. With a gap they will be moving up. At the time you may not find opportunities during the day trading. Even if you find opportunities, it's a very negligible profit, negligible profit. Or sometimes the trades will go against us. But high liquidity is a different concept. High liquidity is based on the confirmation that that is the area more pending orders will be there. That's why we have seen a good success for all these stocks for the last 2 months. The failure rate is very, very less. So far, we have, I think, around some 6 trades are failed, or 5 or 6. If I including if I add today's trade, the Pidilite, probably it could be 6 or 7 maximum. So please uh, take these, consider these points seriously. Never fix a time frame in our mindset. Because I have seen some people are asking which time frame is good for which stock, or which time frame is good for most of the stocks. Time frames will be identified based on the trends. You have to understand. If 1 minute trend is not supporting, if 1 minute trend is a sideways, what you do? If 1 minute trend is uptrend, probably you look for long opportunities. But what is the problem with the 1 minute trends? They change very quite often. Very dynamically, the trend will change. It is looking like uptrend. You want to take a long trade, immediately trend is changed to sideways. Generally, we call whipsaws. You see a lot of whipsaws. Because of the whipsaws, markets will be changing in a dynamic way. Here the question is, are we getting profit or not? That is not the important thing. How many successful trades we are getting? That is the most important thing. How many successful trades we are able to identify? And moreover, all these trades, whatever we are doing, whatever we are getting all these days for high liquidity zones, are they day trading related trades? No, they are not at all day trading related trades. We are looking for short-term return trades, but getting their profits within the day itself instead of next 3 days or 4 days. We identified such kind of system. Don't ignore that point. I have seen many of you, or some of you, or not many of you, some of you are misunderstanding about this concept. Because we are getting the profits during the intraday, might be thinking it is a day trading. This approach, high liquidity zone concept, is not a day trading approach. This approach is short-term trading approach. But short-term profits achieving during the intraday itself, that is the approach. If you would not have defined such kind of strong concept, probably all these trades, you would have waited for 3 days or 4 days to reach your target. Generally, when you go for long opportunities, short opportunities, with the futures, maybe same concept you can apply even for options also. Because I am taking a reference, ROI calculations I have taken based on one future lot as a reference. So with respect to that point, I am telling you, generally to get 6% return on the investment for one future lot, for DIT trades are short-term trades. You need to wait for a minimum of 3 to 5 days time. After waiting 3 to 5 days time, your targets will be reached, and then you will get a profit of around 6% ROI. Day trading, what is the ROI? Most of the people, day traders, they look for 1% and 2% maximum. If you get a 3% profit, that is an amazing profit, great profit for intraday traders. I am talking about single trade point of view. Maybe you may take 3 trades, 4 trades. As a whole, you may get a good profit. That is a different story. Or you may buy 3 lots, 4 lots, or 5 lots. And overall these lots, you may get a good profit. That is a different story. Here, for one lot, for one script, for one trade, how much profit we are getting, that is what I am calculating. Here also you may get 2 to 3 opportunities in the single day. Even yesterday we have seen. We got 3 opportunities yesterday during the whole day at different time intervals. Yeah, the question is not that one. The question is for one script, for achieving that 6% profit, how much duration we are waiting. The duration is intraday itself. Instead of waiting for 3 to 5 days, we are getting that profit during the intraday itself. That's why during the intraday, is it able to achieve 15 minutes target or not? Most of the times, that is what we are observing. Few times there are exceptions because markets are dynamically changed, so we are altering our targets. That is a different story. But many times, or most of the times, even we have seen in all these stocks also, the 5 minute zone, high liquidity zone, it reached 15 minutes target. Entry is 5 minutes only, but it is achieved. Why? How it is possible? Because it is high liquidity zone, it is able to possible. Imagine if this 5 minute zone is a normal 5 minute zone. You would have looked for your target only in the 5 minutes. Probably you might have exited here. This could be your day trading target. This was supposed to be your day trading target. You will calculate, is it having at least 1:3 reward or not? You take an entry, the moment it reached this zone, you will exit. But we are not doing that. We are not doing day trading here. We are doing short-term trading, but getting short-term returns during intraday itself. What is the advantage? The advantage is whatever the profit we are supposed to get in next 3 to 5 days, we are getting in a single day. That is the advantage number one. Of course, advantage number two, like what day traders get the advantage, same. Because we are not carrying overnight positions, any risks happen in the market during the overnight, that won't hurt our trades. And the third advantage is success rate is high. Because I have developed this software, especially the high liquidity zone concept, keeping in mind the success rate should be more than 80%. So far, if you consider our Excel sheet report, we have our success rate is more than 90% is there. But I need to wait until our total trades complete 100 trades. I think so far around 79 or 70, maybe with today's trades, close to 80 trades we will be completing. Probably this month or maybe in the next month, our Excel sheet will be reaching 100 trades. That day we know the exact number. For first 100 trades, how many are successful and how many are failed. But I am sure definitely my target will be achieved, more than 80%. That means before reaching 100 trades, maximum 20 trades should be violated. I don't think the number will be much better than that number. Because so far how many failed out of this 80 trades? Maybe around 6 or 7 trades are stopped out, including today's one stopped out. If you are considering, I am considering actually that is a stopped out with respect to the general supply demand zone traders thinking point of view. If you are asking me today, I would not have taken an entry in that zone at all, because I know that is going to be failed. Because I not only look into the base candles and number of base candles and the structure, the structure of the leg out. I will also look into the structure of the price. Understanding price structure is also very, very important. Because we are following pure price action. If you want to get a good command on the subject, or if you want to get a good command on the market, understanding the price structure is also very, very important. If any of you are playing chess, probably you will be having an idea about structures. Pawn structures, there is a concept. Exactly the same way here in stock market also, the candle structures also you need to understand. Because I was thinking in that direction, I was thinking more deep. I just learn a concept and just following the concept as it is, that never I do like that. I always try to explore new things from the concepts. I always try to identify what is the maximum advantages we get from that concepts, where we can identify the disadvantages in the concepts. That way only we are able to identify, I'm able to identify when a zone is going to fail. We don't have such kind of concept in supply demand zone price action theory, when a zone is going to fail. But we adopted some rules. Based on the rules, we were in a position to identify. That way, good number of zones or good number of trades we avoided. Even high liquidity zones also, we identified, okay, this zone is going to fail. Even today, the best example, Tata Steel. How much in-depth analysis we did for Tata Steel and finally confirmed. Tata Steel is going to fail. Same thing we did earlier, many zones like that. All these zones are going to fail. And such kind of knowledge I am expecting from each and everybody who is listening my videos. It is not a magical skill. It is a skill with some dedication. If you learn, it is not at all difficult to build such kind of mindset. See, always I expect from the people to change their thinking levels. The way how we are thinking, that kind of mindset should be changed. Then getting success is not at all a difficult thing. Moreover, we have an advantage of this software. The software is always finding the stocks near the demand and supply zones. Apart from that, again we are further filtering by looking for only high liquidity zones and strictly following our strategy. Okay, I think I talked too much in today's session, but it is essential and more important for all you people to understand, especially those who are listening my video from starting to the ending. I know some people are listening, some people probably, I know you skip the video, but my concentration is only on those people who are sincerely listening my video. That's why I'm trying to spend more time and I'm trying to give more knowledge and I'm trying to share my experience. That is what I'm doing, especially for those people who are having dedication. Even if one person is listening my video completely, that is enough for me, because my goal is achieved. At least one person probably going to think like how I am thinking. Okay, this is about the discussion about the stocks from our previous report and analysis part. Now let us generate demand and supply zones. Today I will be generating a weekly and daily complete list, and remaining time frames I will be giving stocks near demand and supply zones. So because this is the weekend, let me start with weekly zones. Entry time frame is weekly. Let us find the stocks near to the weekly demand zone. So two stocks are identified. Let's go back. Entry time frame is weekly. Let us find the stocks near to the weekly supply zone. 5 stocks are identified. Let's go back. Entry time frame is weekly. Let us find the stocks which are closed inside the weekly demand zone. These 10 stocks are closed inside the weekly demand zone. Let's go back. Entry time frame is weekly. Let us find the stocks which are closed inside the weekly supply zone. Now good number of stocks are there inside the weekly supply zone. Let me scroll down. So total 56 stocks are there where price closed inside the weekly supply zone. Probably this supply is only going to drive the future market direction. If the supply is weak, probably market we might be going even further up and up and up. If the supply is very strong, probably we can expect again a downfall in the market at least for few days, if not few weeks. So let's go back. Entry time frame is weekly. Let us find the stocks tested during this week. So 3 weekly zones are tested during this week. Let's go back. Entry time frame is weekly. Let us find the stocks tested the supply zones during this week. This is the list. So total 27 weekly supply zones are tested during this week. Let's go back. Entry time frame weekly. Let us find the stocks having newly created weekly demand zones. So total 26 stocks are having newly created weekly demand zones. Let's go back. Entry time frame is weekly. Let us find the stocks having newly created weekly supply zones. So these 3 stocks are having newly created weekly supply zones. So this is about filtered list in the weekly time frame. Now I will generate all the stocks in the weekly time frame without any filters for our further reference purpose. So entry time frame is weekly. Let me generate demand and supply zones for all the stocks, weekly demand and supply zones. I will keep on scrolling this list down. Whichever the stock you want to refer, please pause the video and then you can study the parameters. And sorry, before that, the first 17 stocks in this list are indices and remaining all are equity stocks listed in F&O segment. Please remember the data is not F&O data, the data is equities data only, the price data, but only the stocks are listed in F&O segment. So this is the complete list. This is the end of the weekly report. Now let us generate supply and demand zones for daily time frame. So entry time frame is daily. Let us find the stocks near daily demand zone. So 9 stocks are filtered. Any high liquidity demand zones from this list? ICICI Prudential is there. Only 1 stock is identified in this list. But this is a fresh zone, low on the curve. Excellent. Even trend is also up, 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 monthly trend, weekly trend and daily trend. So that means the location is in our favor, trend is in our favor and moreover it is a high liquidity zone. The only thing you should observe the price direction in monthly time frame. That also plays the major role. So let's go back. Entry time frame is daily. Let us find the stocks which are near to the daily supply zone. So 4 stocks are filtered near to the daily supply zone. There are no high liquidity supply zones from this list. So let's go back. Entry time frame is daily. Let us find the stocks where price closed inside daily demand zone. So price closed in all these highly demand zones. So total 20 stocks are identified. All 20 stocks are closed inside the daily demand zones. Let's go back. Entry time frame is daily. Let us find the stocks where price closed inside daily supply zone. So this is the filtered list. So total 39 stocks are filtered where price closed inside daily supply zone. Let's go back. Entry time frame is daily. Let us find the stocks where tested the daily demand zones. Tested daily demand zones. So 11 demand zones are tested. Let's go back. Entry time frame is daily. Let us find the tested daily supply zones. So this is the filtered list. So total 22 supply zones are tested today, including Wipro we discussed in today's session. Let's go back. Entry time frame is daily. Let us find the stocks having newly created daily demand zones. Excuse me. So these eight, excuse me, these 8 stocks are having newly created daily demand zones. Let's go back. Entry time frame is daily. Let us find the stocks having newly created daily supply zones. So 15 stocks are filtered. That means all these 15 stocks are having newly created daily supply zones. So this is about the filtered list. Now let us generate all the zones. So entry time frame is daily. Let us generate demand and supply zones for all the stocks. So the first 17 in this list are indices and remaining all are equity stocks listed in F&O segment. I will keep on scrolling this list down. Whichever the stock you want to refer, there you pause the video. So total 201 stocks are filtered. So this is the complete list of all the stocks in daily time frame. Now let us generate demand and supply zones for different time frames. Now let us identify the stocks near weekly demand zone and supply zone. So entry time frame is weekly. Let us find the stocks near weekly demand zone. No stocks are there. Sorry, this is yearly demand zone, not weekly, yearly. For entry time frame is weekly, sorry for my mistake. For entry time frame is yearly. Let us find the stocks near yearly supply zone. No more. That means we didn't find any stocks near yearly demand zone and supply zone. Now let us generate for half yearly time frame. Entry time frame is half yearly. Let us find the stocks near half yearly demand zone. So one stock is filtered which is near half yearly demand zone. Let's go back. Entry time frame is half yearly. Let us find the stocks near half yearly supply zone. So one stock is filtered. Let's go back. Now let us generate stocks near demand and supply zone for quarterly time frame. Entry time frame is quarterly. Let us find the stocks near quarterly demand zone. So one stock is near quarterly demand zone. But this is a pierced quarterly demand zone. Let's go back. Entry time frame is quarterly. Let us find the stocks near quarterly supply zone. So one stock is filtered, which is near quarterly supply zone. It is a high liquidity zone. Especially the C underscore DZ, C underscore SZ are powerful zones on quarterly time frame and the monthly time frame. Sometimes some extent at weekly also. You can seriously focus on this if you are looking for any long-term short opportunities. So let's go back. Entry time frame. Now let us generate demand and supply zones, stocks near demand and supply zones for monthly time frame. So entry time frame is monthly. Let us find the stocks near monthly demand zone. No stocks are identified. For monthly time frame, let us find the stocks near monthly supply zone. So 4 stocks are filtered. So let's go back. Entry time frame is weekly. Let us generate for weekly time frame. So entry time frame is weekly. Let us find the stocks near weekly demand zone. But we already generated weekly and daily, so I am avoiding this. So let me jump to 125 minutes. Let us generate for 125 minutes. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes demand zone. So 4 stocks are identified. Let's go back. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes supply zone. So this is the filtered list. So total 17 stocks are near 125 minutes supply zone. So let's go back. Now let us generate stocks near demand and supply zones for 75 minutes time frame. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. So 9 stocks are near 75 minutes demand zone. Any high liquidity zones? No high liquidity demand zones identified from this list. Let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. So total 13 stocks are filtered. It seems there are some few high liquidity zones are available. This is a fresh zone. Aarti Industries. It is high on the curve. Good. Lower time frame, daily trend is sideways, but weekly is uptrend, again monthly is sideways. There is one more, State Bank of India. We have already analyzed its stock a few days back. It is already tested 2 times. Okay, this is the list. Now let's go back. Entry time frame is 25 minutes. For 25 minutes time frame, let us find the stocks which are near to 25 minutes demand zone. So these 9 stocks are filtered. Let's go back. Entry time frame is 25 minutes. Let us find the stocks near 25 minutes supply zone. So these 9 stocks are filtered. Let's go back. Now let us generate for 15 minutes time frame. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes demand zone. So total 9 stocks are filtered. Let's go back. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes supply zone. Total 11 stocks are filtered. Let's go back. And the last final time frame is 5 minutes. Entry time frame is 5 minutes. Let us find the stocks near 5 minutes demand zone. So 8 stocks are filtered. Let's go back. Entry time frame is 5 minutes. Let us find the stocks near 5 minutes supply zone. So total 7 stocks are filtered. So this is about stocks near demand and supply zones for different time frames. I hope this information is useful to you. Let us all meet again in our next video. Thank you.